Hello, my name is Steffen Pauls and I am the CEO and founder of Moonfare. Welcome to Deal Talk, where we bring you face to face with the top minds in private equity. Moonfare is the largest digital platform for investing in private equity. We offer carefully curated funds with remarkable low minimums. Joining our community of world-class investors is free and only takes a few minutes at moonfare.com. We do this to give more investors direct access to one of the most attractive global asset classes. With our Deal Talk webinars, we aim to democratize access to the knowledge surrounding it. Enjoy. Welcome. I'm very pleased to have Mike O'Sullivan at our Deal Talk session today. Mike, would be great if you could introduce yourself to the audience.
Thanks very much, Steffen. So I'm the new chief economist at Moonfare, advisor to Moonfare. Very, very happy to join the firm. I've had most of my career as an investor in public markets in the last 4 or 5 years. I've made the conversion, the transition to venture investing, still writing about economics, about the private economy. I'm really curious as an economist to delve into what actually is a relatively unexplored part of markets, the private markets, private equity, venture. And I guess today for the Deal Talk, a really big part of that is what's happening in innovation and specifically in artificial intelligence. And as a sort of personal story, I remember back in January 2023, I first dialed into ChatGPT. And was fascinated by it, and was fascinated also by the fact that few people around me were using it. But then within weeks, everyone was talking about it, and the conversion rate of AI and ChatGPT in particular has just been astronomical. Today, OpenAI is worth, I think, nearly 90 billion. XAI from Elon Musk is worth something like 20 billion. So this is it's a phenomenon. I still feel it's a public market phenomenon that people look at stocks like NVIDIA and they think of AI. But as you and I know, private equity venture have been investing in this stuff for a long time. So it's probably much more real and much less hype. What do you think?
Yeah, look, I want to use 2 quotes which I found impressive. And one is from Bill Gates. Bill Gates recently said, referring to the AI revolution, saying, "This is the lifetime chance of an entire generation." Look, I have 4 children, as you know, so I'm really, keen to see how this evolves for the next generation as well. The other quote is from Steven Schwartzman, a CEO and co-founder of the largest private equity firm in the world, Blackstone. And he was asked a couple of years ago in an interview, why is Blackstone so successful in private markets? And his answer was, he said, "We do see things that others don't see." Today, very recently, a month ago, Steven Schwartzman from Blackstone said, "Investing in AI is the mega trend of the mega trends." Look, Facebook took 2 years to reach 100 million users. The mobile phone needed 16 years to get there. And you're saying this, in contrast, ChatGPT got to this milestone within 2 months. Mm-hmm. I find it even more impressive. ChatGPT is the fastest company in history, in mankind, that has reached 1 billion in revenue, just 13 months after it went live operationally in December back in 2021. Interesting part from my end is not just generative AI or OpenAI, it's really the wake-up call that came with it for Google and other major tech companies, for entire industries, for even entire nations. I still remember 3 weeks or so, Google called out the code red. First time in the history of the company. And code red means that they saw their business model fundamentally threatened by the new development by OpenAI in particular. They called back the founders. And this is really what it is about. It's a shock for an entire ecosystem. Look, AI already accounts for 1/4 of global venture investments. There's a very interesting study I came across from Goldman Sachs. They estimated that the AI-related investments will amount to 2.5 to 4%, somewhere there, of the total US GDP in the long term. And if we translate this into numbers, the GDP, as you know, of the US is some 25 trillion. We are talking about $1 trillion US. This is 1,000 billion US dollar that will come or flow as investments into the sector. Interestingly, in Europe, and we will talk about Europe later, their share will be significantly lower, according to the same study. Goldman is talking around 1.5% of the GDP in terms of investments. And one of the reasons, interestingly, behind it is that they are stating the regulatory approach that the European Union has taken very, very early as first continent, so to say, or economic ecosystem in the world, is preempting really the development. It was not very helpful. Look, another stat that I found interesting is that the market for AI solutions is expected to grow from some 100 billion, that was numbers from 21, to reach nearly 2 trillion, 2,000 billion by 2030. McKinsey predicts that generative AI alone will lead to annual productivity gains of some $4 trillion. This is comparable to Germany's entire GDP. One other stat, a friend of mine, he runs as the CEO the Boston Consulting Group, and in an interview 4 weeks ago in the FT or so, he was saying that already 20% of the global revenue of BCG is in AI-related projects. And he told me this number is going up to 40% already or as early as next year. So long story short, to answer your question, I'm in Jamie Dimon's camp, CEO of JP Morgan Chase, who said recently, this is not a hype. This is real. When we had the internet bubble the first time around, that was a hype. This is not a hype. This is real.
So I guess the Google Code Red gives a sense of the urgency, Steffen, and the way in which this is going to transform business models, not just in the IT sector, but in defense, healthcare. A lot of the finance companies we know are using AI actively in markets and in advisory. Consultancies, you mentioned, get about 25% now already of their revenues from AI. I'm going to show my age here. I mean, I started working in finance around the time of the dot-com bubble. And when the bubble burst, probably until the Google IPO in 2004, talk about innovation was quiet. And it just seemed like the dot-com had gone away, even though there was a kind of a telecoms infrastructure in place. And it's probably a bit different this time in terms of industrial structure, because AI is being built on these huge corporate ecosystems and pillars, and financial markets are obviously much bigger as well. So you would push back on the hype that this is something that's ephemeral and that's not a bona fide industrial structure.
Look, we all know the quote, history repeats itself, but not this time. Yeah, you said it rightly, we all experienced in our professional careers something similar to what's happening in the AI boom today with the internet, early 2000. Two reasons why I believe it's fundamentally different. And one you stated. First of all, the major difference from the internet era to what we are seeing today is that today the largest companies on earth invest in AI and they create a comprehensive ecosystem, by the way, with a lot of governmental backing. This wasn't the case 20 years ago. The internet was basically built around a few Silicon Valley. You mentioned Google, which was founded in 1999. A few Silicon Valley startups and a few courageous venture firms were really creating the system around the internet. This is different. AI is now emerging from the existential struggle of the planet's biggest companies, with hundreds of billions of US dollars floating and flowing into AI application development. My second reason is, look, companies these days stay private for much longer. Again, this is fundamentally different from the internet boom. You mentioned Google. Google founded 98, by the way. It went already public. You mentioned 2004, August 19th. The market cap were these days, some 23 billion. Google, as we know, it's worth over 2 trillion today. So you made like 100,000 times your investment. Apple released the iPhone in August 2007, and it tripled its stock value since then of 150 billion in 1 year. Today, it's worth 2.8 trillion. Meta, the same story, went public with some 100 billion in valuation. Today, it's 1.2 trillion or so. So you could have, all of us could have become very wealthy when you invested early on in publicly traded companies in the internet. This is not the case today because companies stay private for much longer than 20 years ago. The entire ecosystem has learned. We have different pools of capital. There are growth funds. There are crossover funds. The government is active. We have these huge tech companies investing in the private space in AI. And this is the fundamental difference between the internet area and the AI area. Value creation now happens in private markets, and it's leaving little left for public markets. Look, my favorite example is Uber. I came with an Uber today to the office, and no doubt it's a great company, but think about it. Uber was founded in March 2009 and stayed private for 10 years. At the pre-IPO in 2019, it was valued some 120 billion. IPO price then was a little bit lower, but came down to some 70 million. Now, over 5 years in the public hands, it came back to more or less the same level at the time of the IPO. It's trading at some 130, 140 billion today. That's not a great return in the public side. Yeah. But think about it, even if you had invested at a valuation of 15 billion during the private lifetime of the company, you would have made a 10x. You don't make this in public markets so easily. Look, let me ask you, Mike, what do OpenAI, Anthropic, C3 AI, Databricks, Mistral, SenseTime, Poolside, you name it, what do all these companies have in common?
Well, they've got a couple of things in common. They're private companies, and all my old investors, all the people I know in family offices, endowments, institutions want access, and they want access early. And I guess that's the name of the game, is getting access to these really great opportunities. And as you know, I started my life as an economist, and if I think back to the link to what's driving these innovations, a really important component is capital markets, and I guess that's why America is the leader in this field. Let's be honest about it. And if we go back to the dot-com bubble, public markets were in many ways just developing. We didn't yet have ETFs. The options market was quite small. Those two sectors alone are huge now. And what ETFs are doing is they are effectively making active investing almost extinct. Yeah. Options markets are distorting what the big indices are doing. You have the big tech stocks as another distortion. So the actual dispersion of returns in public markets is very, very small and hard to get consistently good alpha. And what I find intriguing is that private markets today, in many respects, our public markets were maybe 15 years ago. Sure, private equity and venture have really developed, but I think there is more to go. A lot more to go as well in democratizing those markets. We're seeing some developments happen pretty quickly. The secondaries market, I think, opening up is very interesting, and it's kind of, if you like, elongating this idea of the life cycle of funding for private companies. So it's very interesting that innovation is being accompanied by some really big changes in private markets. I just want to ask you to come back to you, Steffen. I mean, we talk a lot about the Magnificent Seven, these big public equities, their market caps of 2 or 3 trillion. Do their valuations make you cautious?
Yeah, look, we are getting this question often when we talk about AI, and people say, hey, I've been playing AI. I bought the Magnificent Seven, the Microsoft, Googles, and Apples, and so on, and I've been doing good. Yeah. Of course, you have a great time over the past years. But if you think about that, the entire AI revolution, is just in the beginning. Second point is that these companies only represent a fraction of what's happening in AI. Yeah. They are active players. They are important. But you have to ask yourself, how much upside is there really left? And there are more and more analysts that expect the growth to be limited. And if I may use 2 stats that I found interesting, the Magnificent Seven, and there was a study from Deutsche that came out before last week or so, stands already for some 30% in terms of total market cap of the S&P 500. And in terms of global market cap, if you take all publicly traded companies together, they stand for some 13%. So the question you have to ask, if you only play AI through the public markets, how much upside is there really left? But more importantly, as I said earlier, most money goes into the private markets, and this is where the real opportunities, I talked about the 10x Uber thing, where the real opportunities are and where the valuation upside is, in our view, much higher than in public markets.
Exactly. And let's dig into some of the things that make private market investors good, ecosystems, and also what they're looking at. So let's stick first of all maybe with AI and some of the things that the venture and private equity managers are going to be looking at, because it's more than AI. It's semiconductors, it's batteries, it's data centers, it even stretches out to quantum computing. What are the kind of things that they're looking for?
Yeah, look, you mentioned quite a few, and the theme of the game currently, and most money currently goes into data centers.
Yeah.
Steven Schwartzman very recently said that he expect, and Blackstone is a major player in this regard, that the volume, investment volume will be up to 1,500 billions just for the brick and mortar data center game. This is where the current focus is. And then, of course, everything related or associated to generative AI infrastructure, but also the application side of things. As professional investors, as we are, we are often getting asked, is it a hype? First of all, what makes me a little bit skeptical is in 2023, 75% of all S&P companies were mentioning AI in their quarterly earning calls. I can't imagine with all my imagination that all these companies are at the end really active or even close to be AI players, but they are using it. So it's a word. It's a word of the game. And then there is a very interesting structure. It's a Gartner hype cycle, which was, by the way, as early introduced as 1995. And Gartner is differentiating between 5 different key phases in innovation. First of all is the innovation trigger. And you mentioned ChatGPT. Innovation trigger was December, or it was end of November 2022 when ChatGPT came out. The second one is what they call the peak of inflated expectations. The third one is the phase of disillusionment.
Okay.
Then it's slope of enlightenment, and then it's the plateau of productivity. And in the last Gartner report that came out in 2023, generative AI was placed at the peak of inflated expectations. So we are probably at a phase where the hype is already expressed in an incredible amount of expectation that come with the AI revolution. Look, the difference again here, and we saw the same internet, you can structure and apply the same methodology. We are probably in a phase of very, very high expectations. But again, Jeffries brought out a very, very interesting study, and they said that this phase with a disillusionment, which follows the peak of the inflated expectation, is near. But this time, and at the internet, it took probably the boo.com, and it happened in 2000 or so, and then it took until the IPO of Google before there was again hope or enlightenment. But this time, Jeffries predicts that this phase of not met expectations will be much shorter. They say that as early as 2025, we will see in terms of real revenues, real use cases of AI, many, many, many things happening. Of course, you can say we are in inflated territory currently, but this inflated territory in terms of expectations will be very, very short.
Yeah, exactly. And we're in this, what I would call a sort of code red economy, where these changes are accelerating. We're beginning to see the winners and losers of AI very, very visibly. And you're of course seeing these across many of the managers we deal with. Do you want to maybe just, Steffen, elaborate a little bit on some of the subsectors beyond AI and what the managers are looking at, and we can then maybe talk about some of the winners and losers, how we best apply AI in our economy?
Yeah, look, one interesting study I came across again is how actively private equity is not only investing into AI and certain subsectors, but also in terms of how they act as owners. And 50%, of all companies which are owned by private equity companies are already, as we speak, investing into AI. That is from Deloitte, that number. This is really stunning, because if you compare to family-owned businesses, the same number is only at 25%.
Yeah.
So private equity is not only active in terms of investing, but also very much active in terms of how they manage their portfolios and force them, so to say, to invest into AI. And then in terms, of fields, the private equity industry over and above the data centers that I already mentioned is investing in. It's the company trainings and developing AI tools, AI models in particular. Then it is, of course, the entire software development to run AI-enabled applications. And then, companies are investing, as massively in cloud infrastructure and the associated services around. These are the core topics, apart from data centers, that are currently on top of the private equity industry when we talk to them.
Yeah, and actually, so one comment just to go back on. One comment that's very current at the moment is that private equity has done incredibly well in terms of its returns in the last 10, 15 years. Some of that has come from leverage, and now attention is turning to business turnarounds. And in terms of what I'm personally seeing in businesses that I'm invested in or that I know, is a lot of those turnarounds are AI driven, in the sense of operators going in, using data analytics, not just to drive what consumers are doing with those businesses, but in terms of analyzing where a business maybe has gone astray. So it is very, very current and very, very active indeed. Maybe we chat a little bit about what's happening in Europe. I mean, one of the things I notice as well is that Europe is following the trend in the US, but in its own way. We have a number of really important and thriving hubs of private markets: Berlin, Paris, Munich, London, further afield, Tel Aviv, where I think private capital markets are all developing, and they're poles of activity for AI, because you have labor, you've got highly skilled labor, you've got the big universities. Important, you've got governments behind them. We now have the EU AI Act, so we know what to expect from governments. And hopefully now we're going to get funding, we'll get movement on capital markets. So does that make you a little bit more optimistic on what we're seeing? We're in Berlin today. I was in Paris this morning. So I think we're in Europe actually just at the beginning of quite a big trend here.
Look, if you take it from a geopolitical standpoint, there is no other way. If Europe would leave out this revolution, it would even fall more behind. It is falling behind, as you know, compared to India, to China, to the US, of course. So there is no other way. And there are good reasons for hope. We have a couple of incredible companies emerging. I'm thinking about Mistral in France. Used to be, by the way, based in the US. Now it's based in Paris. We have Aleph Alpha, we have Poolside. We have companies in the AI space, very promising companies in Tel Aviv in particular. This is all emerging. So there are very, very good reasons. What has to follow, and you were mentioning it, and what is the reason why the US is in particular, and China is a different game, but so far ahead of Europe. We have to really build the ecosystem, and all forces have to come together. And what I'm hopeful for is taking institutions, even like the European Investment Fund, the IFE, is now have launched what they call the ETSI program, the first program that really fosters the creation of large growth funds that go in deep tech. They foster or subsidize or support these funds with up to 1/3 of their total fund size. So you could get up to 300 million for a 1 billion growth fund. And those funds, by the way, are also emerging in the ecosystem to provide the necessary financing, because the financing needs are just incredible.
Exactly, and one of the reasons I'm very curious about private markets and private assets is the dispersion in returns between the funds is actually huge, and I don't think people appreciate that. So the good funds do incredibly well. There are some funds that don't do well at all, and one of the things that makes the good funds do well is obviously is pedigree, quality of the teams. It's the ecosystem, being able to team up with governments, financing institutions, supply of labor, etc. So there is, I think, a coherent model at the heart of this. I think what many people don't get or don't see is how to invest in this. And maybe we've spent the last half an hour tantalizing people with the names of all of these AI companies, and they are, I think, out of the reach of many people. Do you want to just spend a few minutes on how we can access those and how we help people to access those through Moonfare?
Yeah, look, Mike, you're saying it. AI is not only a fundamental disruption for the broader economy, and most businesses have to reinvent themselves. It's also and equally a fundamental disruption for the entire private markets industry, whether you're in venture, whether you're in growth, or whether you're in ordinary buyout. So the industry has to reinvent itself, both in terms of what do they do and how do they apply AI to their existing portfolio of companies. Otherwise, they get disrupted, but also in terms of new investment themes. And again, here we are seeing, that some are, let me say it in easy words, more on their tiptoes than others, have really understood how fundamental this is also a change in terms of investment themes, in terms of talent that they need, in terms of methodology that they apply, whether it's in deal sourcing or whether it's data analytics later in the lifetime of their companies. Look, and we have put already 2 to 3 years ago a very, very active working group in place here at Moonfare that really thinks or has been thinking since then, what are the funds that are most advanced? Where are the top experts from Stanford? People who have been in AI for years and not as a new fashion since ChatGPT came out. And look, to your question, they are leading US funds. One that jumps up to my mind is, for instance, Khosla. Has been active
for a long time.
Is early investor in ChatGPT. But thinking also about Bain Capital with their venture arm are very active. Insight was a shareholder within Moonfare. They all are changing, their investment focus as we speak to identify, the best AI companies out there. My bet here is those companies that have started to or have been following AI for years already are in a much better position because they have the talent.
They've been doing it for a long time.
They've been doing it for a long time, and now the time is ripe. And the other thing that you need is, given that there will be a few global companies, hopefully some from the few are already there from Europe, US, India, China, of course, Israel. They must have a global footprint and global investment approach. So those players that are equipped with these ingredients, they will make a great living, a great investments out of AI. And we have them on the Moonfare platform.
So Steffen, just to kind of summarize and wrap up what we've been discussing for the last half an hour, which has been fascinating. We're on the cusp of a truly new technology, a new approach to technology that's based on other innovations from the internet to social media, data in particular, data management, machine learning. What I think in my mind is different this time is the financial markets behind it. The internet was effectively the child of the equity markets. AI is really the domain and the realm of private markets. Many of the private equity venture funds you've known through your career have been doing this for 4, 5, 6 years and more. They're very well plugged into the system. So I'm going to give you the last word. I hope this is the first of a number of many discussions we're going to have on AI as this mega trend grows.
Look, I'm sure we will have more discussions. For today, Mike, I would be happy if people would take 3 things with them. First one, we are at the beginning of this incredible revolution. And this time, it will be much bigger than anything that we saw with the internet. That is my conviction. And it's happening much faster than last time, early 2000. The second point is, for me, the entire AI phenomenon, and you talked about this ecosystem that is evolving or is out there in the US and evolving and emerging in Europe and elsewhere. The AI phenomenon is, for me, a self-fulfilling prophecy. Why? Because it's happening and it's been driven by the largest companies on earth, including entire nations that fight in a way for economic survival. And the third one is, and that is again my conviction, anyone who really wants to participate systematically in this revolution from an investment standpoint will not get around private markets. A lot is happening in private markets, and private markets will be the dominant force really behind financing and behind driving the entire phenomenon on a global basis. So this is why we are here. This is why Moonfare has a team that really tries to select the best AI heavy funds out there. We are also thinking about bringing AI-related direct investments to the platform. So it's a big theme, always with a caution and professional approach to it. Not everything, not everything is real, where AI is as a label on it. But we will select the right products for our community.
Thanks, Steffen. Great discussion.
Thanks a lot, Mike. And to the audience, thanks a lot for listening. It was great having you. Thanks that so many people dialed in, and hope to see you soon at the next Deal Talk.